We are entering into another session, and in this session we will be learning about the second part of financial market, or when we said about financial market consists of money market and capital market. We have already learned about money market. In this session we will be learning about what is capital market. Capital market, as we all know, capital market is the market which caters for the requirement of long-term funds. Capital market is providing monetary support or providing funds for long-term purposes. It is a series of channels through which savings of community are made available for industrial and commercial enterprises through various securities, various instruments. The savings are being channelized in order to fund for industrial and commercial purposes, which requires large amount of investment. As we all know, it is for longer term. So it is market which caters for long term funds. It has been said in a different way. And development banks, commercial banks and stock exchanges are part of capital market. And capital market, as it helps the savers to invest into long term ventures or ventures which can fetch more of profit, which in turn transfers the savings of investors into most productive use, and in order to fetch more of return, it contributes to economic growth. So capital market is a very important part of financial market, which is making sure that the savings of the savers are provided a chance, an opportunity to invest into those ventures which can help in economic development. So we can say capital market is a very important part in developing the economy of a country. Now we can see capital market is classified into, capital market has two segments or two parts. One part of capital market is called as primary market, and the other one is secondary market. It is classified into primary market and secondary market. In capital market, when we say primary market is the market for issue where securities are issued for the first time. Securities means can be debentures, it can be equity shares, it can be preference share, it can be bonds, etc. So such securities, when it is issued for the first time, we call it by the name, or it is happening in primary market. So primary market has one more name, that is called as new issues market. So primary market is one categorization of capital market. Capital market is the market for long term funds and for raising those long term funds when securities are issued for the first time. That happens in primary market. And what is secondary market? Secondary market is the market for purchase and sale of existing securities. For the first time we will issue it in primary market, then onwards if we want to sell, if we want to purchase securities, that will be happening in secondary market. That is why it is said as market for purchase of existing securities, purchase and sale of existing securities. And again, secondary market is very familiar to us, and that is what we are calling as stock exchange or stock market. That is secondary market, because stock market or stock exchange is helping us to purchase and sell securities, existing securities. When it is issued for the first time, it is in primary market. Afterwards onwards, it happens in secondary market. Now we are coming on to primary market. Primary market, as we said, it is a market where securities are issued for the first time, and capital can be raised through equity shares, debentures, loans and preference shares. We have already seen. Now, for what purpose we are using all this money? Funds may be raised for setting up new projects, coming up with the new happenings, expansion, making with more larger scale of operations, diversification, going into different products, and modernization, purchasing new equipments or purchasing new technology, whatever be. For all this purpose, we are raising funds through primary market. And next topic we have to learn in primary market is methods of flotation. How we are issuing securities, which are the methods we are adopting for issuing securities. The first one, there are 5 types, but 4 types are primarily we have to learn. Offer through prospectus, offer for sale, private placement, and rights issue, and there is one more thing called as EIPO. Now, what is offer through prospectus? How issue of securities happen through the method of offer through prospectus. Prospectus, what is prospectus? We have already learned in 11th standard. Prospectus is an invitation to general public. It's an invitation to general public to invest into a particular opportunity where details regarding that particular business opportunity will be detailed. So, by issuing prospectus, a firm is inviting general public. A firm is inviting general public to invest into the venture. Public companies, this involves inviting subscription from public through issue of prospectus. And looking at the prospectus, looking at the investment method, in which all areas it has been invested, how much is invested, an investor can decide whether to invest or not. So, it is one of the method by issuing prospectus. They are inviting, the company is inviting general public to subscribe the security, subscribe the shares, and it is direct purchase from the firm. It is direct purchase. The firm is directly dealing with the investors, and they have to, when issue through prospectus is happening, they have to fulfill certain provisions, and the contents of prospectus has to be in accordance with the provisions of Company Act and SEBI guidelines. So, prospectus is prepared, and by issuing prospectus to general public, they are inviting to purchase the shares when they are issuing it for the first time. So, offer through prospectus. By issuing prospectus, general public is invited to purchase for shares. Second one is offer for sale. Offer for sale. Offer for sale is a bit different thing. It is not directly to general public. Instead, there will be intermediaries between the firms and public through stockbroking houses, through brokers, through issuing houses. They will be issuing the securities. Company will not be directly dealing with the general public. Instead, there will be intermediaries who in turn company will sell it to, or company sell securities to brokers, and in turn it will be resold to the general public. So, there will be intermediaries in between company and general public. So, offer for sale is through intermediaries. Third one is private placement. Private placement is a method whereby allotment of security is to some selected individuals or some institutional individuals. What to say? It will not be catered to everyone. It will be catered only to a selected group of people, selected group of individuals or institutional investors. The aim behind that is, or this will facilitate in raising more funds than issuing to general public. Can raise quickly because already it has been set. It will be given to these parties only. So, we can raise funds faster than a public issue, and it will help. it will help those companies which cannot have access to primary market because it's a bit expensive. So they can directly beforehand they can decide who will be purchasing it, or they can give only to this particular party. So where general public or such kind of expenses which companies cannot bear, such companies can go for private placement, issuing the shares to selected individuals or institutional investors. Quick raising can happen. Rights issue. Rights issue is a method actually beneficial to the existing shareholders. Additional shares or additional securities, additional capital is to be raised. The existing shareholders will be given chance to purchase shares in proportion to shares they are holding. For every 10 shares, 1 share. That means for 100 shares, they will get a 10 share. They can purchase share. So it is a privilege given to existing shareholders. It is a privilege given to existing shareholders to subscribe to a new issue in accordance to terms and conditions put forward by the firm. Existing shareholders are given preference in purchase of new issue. So that is something which is available for the existing shareholders. There is one more method of flotation which is being said, that is EIPO. EIPO is a method whereby issue of capital to public through online system of stock exchange. And when this initial public offer is made through with the help of electronic media, we call it by the name EIPO. So that is also another method. So we have seen what is capital market and the classification of capital market as primary market and secondary market, and we are talking about primary market and the methods of flotation in primary market.